Hello everyone. From the October all-time high, yesterday Nifty fell 10.4% and it was mainly dragged by banking stocks. Here, most people already know about the FIA selling spree, and in the last video, we discussed in detail about the high October month inflation, which itself a very much negative sentiment. In addition to that, yesterday RBI did play their part to increase that negative sentiment further, which is one of the main reason which triggered the selling in the second half. So in this video, first let's discuss those in detail and then we can discuss our regular pre-market report for today 14th November 2024 for the Indian stock market in terms of Nifty and Bank Nifty. First, how RBI made it further negative. In 2014, RBI issued the framework for the DSAP banks management, like how that designated bank has to do business. DSAP means domestic systematically important banks. Basically, the bank which classify as DSAP is systematically important banks which failure or some distress or any type of mismanagement in that particular bank could trigger a potential financial crisis in the country. And it's the very big threat to the stability of the India's entire financial system. In simple words, they are too big to fail. So in order to avoid that, along with the normal banking regulation, these banks based upon their bucket position, they will be under bigger RBI scrutiny. For example, higher bucket banks require to maintain a larger capital buffer along with other additional financial metrics. Basically, higher they go, they will be under high scrutiny. First, in 2015, SBI, State Bank of India, was classified as DSAP and it's still to date. Then in 2016, ICICI Bank was classified. Finally, in 2023 December, after the HDFC Bank merger, HDFC Bank was added to the list as the third bank. And for this year, RBI retains those three banks as DSAP, no new entry. But the problem is they increased the bucket position. Last year SBI was in bucket number 3, that yesterday increased to 4. So earlier, along with their regular capital adequacy ratio, they have to maintain additional margin of 0.6%. That from yesterday onwards increased to 0.8%. Similarly, earlier HDFC Bank was in the bucket number 1, that now increased to 2. So they also now has to maintain 20 basis point additional capital for the risk weighted assets. Whereas ICICI Bank maintains the same bucket number, which is 1. As I said, this extra capital is one metric. There are more similar metrics which those three banks has to maintain. As a consequence, this will compromise the bank's net interest margin. Hence only if we see all the banking stocks, HDFC Bank and SBI fell near 2%, whereas others only fell 1%. To be honest, according to me, in the long term, this level of scrutiny is important to those banks and indeed they are too big to fall. But from the market perspective, they want less bureaucracy and increased efficiency. So market took this as negative. Anyway, this is also one of the main reasons yesterday why Bank Nifty was under severe selling pressure. Now coming to regular stuff. Last night in US, before their market opening, Bureau of Labor Statistics released the US consumer inflation number for the October month. As usual, in the snip, the top two row is core inflation, that is without food and fuel, whereas the bottom two is overall consumer price index CPI with fuel and food. So on yearly basis, core inflation increased 3.3% and overall inflation increased 2.6%. Both of them were in line with the analyst expectation. Then on monthly basis also, both the number comes in line with the expectation. This inline macro data increased the CME Fed watch tool probability for 25 basis point rate cut in December month to 90% compared to before it was 60%. This made the US market positive for most part of the day, but the final hour profit booking trimmed some. In the end, Dow Jones increased 0.11%, S&P 500 up by 0.02% and Nasdaq slightly down 0.23%. In case of VIX, it dropped near 5% and to 14. About oil, it didn't change much. At the time of this video, Brent crude trading around $68 per barrel, whereas WTI crude last night closed at near $72 per barrel. Regarding Indian ADR, in line with the Indian market, only Infosys closed positive, all others closed negative. So if you calculate the arbitrage, more or less both banks and IT stocks and including Reliance GDR all indicating flat to negative. No concrete negative which we found like in the banking stocks on the day before yesterday. Then about GIFT Nifty, early morning it closed at 23,666, equating it with the spot market. It's indicating the gap up opening of 20 to 50 points. So these are the things happened in the dollar market. Now let's see the India related info. I don't know when I will stop counting. For the 33rd session in a row, FIA was net sellers. Yesterday net sold for 2,500 crore rupees and DI net bought for massive 6,150 crore rupees. So basically, despite DII buying massively, Nifty and Bank Nifty fell crazy. Then regarding the open interest volume analysis, FII increased the short position to 78% from 76%, whereas proprietary traders also increased the short position to 59% compared to 55% earlier. And in the option market, actually everyone sold call option like crazy. So overall open interest data indicating further decline, but Nifty dropped more than 10%, so we cannot rule out some short-term bounce. As a summary, US market closed flat to positive. For now, GIFT Nifty indicating the gap up opening of around 40 points. In case of ADR, all indicating the flat opening trade, but the increased rate cut probability might favor the IT stocks. Let's see. Moving on, as per stock open interest, Ipca Lab, Metropolis, Deepak Nitrite, Sun TV, Balakrishna Industries, Maruti and TVS Motor got an increased open interest along with a negative close, indicates the short build-up. On the other hand, only 4 stocks got the long build-up: Marico, Alchem Lab, Hindustan Unilever and Havels. These 4 stocks got an increased open interest with a positive price close. About the things to look out, Hero MotoCorp, Grasim Industries, Glenmark Pharma, Ipca Lab, Bajaj Healthcare, Bharat Dynamics, Hindustan Aeronautics, Bharat Forge and Muthoot Finance are some of the major Indian companies' earnings results are scheduled released today. Then about macro, during our market hours around 10 am, India's wholesale inflation is due. Then in the afternoon, UK and Europe's GDP growth data is scheduled release. Finally, in the aftermarket hours for US, weekly jobs data and US wholesale inflation PPI for the October month are some of the important items we need to keep an eye out today. Coming to technical, Nifty opened 60 points gap down and extended the selling throughout the day, then closed at below 23,600 for the first time since June 25. Thus on the daily chart, Nifty formed a long bearish candlestick pattern with above average volume. Because this candle followed not exactly but a form of bearish engulfing pattern, technically this is considered as negative confirmation. Additionally, Nifty has fallen towards its 200-day moving average and furthermore it traded below the lower band of the Bollinger Band with RSI momentum indicator in the negative territory, which all is a negative sign. Hence, at present, the immediate support is at 23,500 and a fall below this level could trigger further correction towards 23,300 to 23,200. On the higher end, resistance is at 23,750. In case of Bank Nifty, it also opened 130 points gap down and it also extended the selling, so it dropped below 50,000. However, managed to close above 50,000, the lowest closing level since August 14. Thus on the daily chart, Bank Nifty formed a large bearish candlestick pattern. Similar to Nifty, Bank Nifty also hit the 200-day exponential moving average 49,900 and fell below the lower band of the Bollinger Band by decisively breaking the upward sloping support trend line, which all indicating negative. Hence, on the upside, 50,800 to 50,900 will act as an immediate hurdle zone from short-term perspective with support at 49,700. Regarding the weekly options data, the maximum call option open interest was at 24,000 strike, followed by 24,500 and 24,200 with maximum new call option rating at 23,800 strike, followed by 24,000 and 23,700. On the put side, the maximum open interest was at 23,000 strike, followed by 22,500 and 23,300 with maximum new put option rating at 23,300 strike, followed by 22,200 and 22,800. Thus, from options data, 23,000 is likely to be the next support, while resistance is at 24,000 level. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.